Hello, welcome to Rabbit Money. Hey Balaji, what's up?
What's up, Bharat? I'm good, doing good. How about you?
All well.
That's good. So at least it's good to know that we are doing well. But what's happened to the Indian markets when the
Well,
when the when the global
yeah,
markets are doing good, and
right.
apparently, the Indian markets are like not. I mean, it is after the COVID. I think this is the worst performance.
Well, yes and no. We had a little bit of correction at the beginning of the Ukraine war. I think this is the second time. Right. So, well, I mean, it's usual and unusual. Sorry if it sounds a little mutually contradictory. However, there's multiple reasons, right? I think the primary reason being, if you look at it from the buying, selling, demand, supply side, right? Foreign investors, FIIs and
Yeah,
FPIs, have been
that's
have
right.
been pulling out money from the equity markets and from the debt markets also, but debt markets not as much. Uh, right, equity markets significantly, right? They've pulled out about $15 billion so far this year.
Right,
I mean that's not a lot of money, but and that's been absorbed by domestic investors, retail and institutional. You know, however, this is a significant
right,
flight of capital as far as the
right.
depth of the Indian market is concerned. So that's the first reason.
Right. But
The
why do you
second,
think
this
that so? I mean, is it because of the competitiveness of another emerging market like China, or that they're due to their policies, or you
well,
know,
that's a theory going around, which is post China stimulus,
right,
that capital has been predicated to fly from India to China
mm,
from foreign investors, mainly Western investors, from America and Europe. That's significant. And then there is another, which is the most fundamental aspect, right? Which is the fundamentals. The earnings growth
right,
has been, about 14, 15, 20% in the last 2 to 3 years.
right.
And this year it's been projected to be somewhere between 3 and 5%,
That's right,
right? I mean,
right.
is that the new normal, or is it ever going to go back to 15, 20% CAGR? I mean, we don't know. Nobody knows.
Mm,
Uh, but my suspicion is that, this 15, 20% CAGR that corporate earnings showed
right,
in the last 2 to 3 years
mm,
was because of lengthened COVID recovery process.
right, right. Yeah, I mean,
That
clearly reflects if you look at it. Only 20% of the Nifty companies, have met the
right,
targets. Right? It's uh, you know
right,
quite appalling, but yes, that's the truth. Yeah.
right. And so we cannot take that as the, sustainable trajectory.
Right.
However, the the sustainable trajectory could be somewhere between the 3 to 5% of this year and the 15 to 20% of the previous years, right? It could be somewhere between these two numbers, and that will be the new normal.
Right.
Is this 3 to 5% the new normal? I don't think so.
Mm.
You know, but is it going to go back up to 15, 20% uh, sustainably? I don't think so either.
Yes. Yeah. Right. I mean, of course, I think we were very overvalued as well. Right.
Absolutely.
So that's also the reason we can't have that kind of growth, obviously. And we, like you said, the fundamentals have shown that, uh, very clearly.
Absolutely. And there was this interesting study. I'll probably will put this up in the comments or the description, right? The study is the historical average valuation of the Nifty is about 20. I mean, the price to earnings ratio of the index,
Right. Right.
right? Right now it's about 22. So
Hmm.
there's room for more correction
Right.
before it reaches its historical fair value,
Hmm.
right? Uh, but there's one more thing, and that is the valuation right now, which is about 22,
Hmm.
right, is just about at the top of the profitable valuation and the bottom of the lossy valuation. I mean,
Hmm.
what I mean by that is if
Hmm.
the valuation is higher than 22, most likely you'll make a loss in the next 3 years
Hmm.
if you invest now, right? If
That's
the
correct. Yeah.
valuation is less than 22,
Hmm.
most likely you will make a profit in the
Hmm.
next 3 years,
Hmm.
right? And the more undervalued it is, the more profit you will make, and the more overvalued it is,
Right.
the bigger is the expected loss as well as the probability of loss.
Right. Right. That's a very interesting point. I think we should probably put that up in our comments. Yeah.
Yeah, yeah, and that would also credit the person who has analyzed it. It's not me.
And I think the timing of the decline as well is also triggered by a lot of global economic events. You know,
Okay.
I mean, we expected this to correct some time, but this
Right.
sudden shift, is because of some of the
Well,
global economic.
well, well, it's always sudden, right?
Right.
I mean, it doesn't mean, it has to happen when you expect it,
Right.
but whenever it happens, it's sudden, right?
Right.
I mean, the markets can stay irrational for longer than I and you can stay solvent. However, when the market does give up its irrationality, it does do that in a hurry.
Right. Right. See, I mean, I understand if it's one of those events, for example, uh, the Ukraine war, right? So at that time, the market did correct, but not like so drastically, right? But this time around, because of the escalation, U.S.
No, this is
elections, the corrections, everything, uh, came in with the same time, more or less.
well, that's true. Again, I don't think U.S. elections are a big deal
Yeah.
for Indian financial markets. I mean, it shouldn't be ideally, right? I mean, people argue that Trump could tighten the visa regime and stuff, and that could
Mm,
affect the tech
mm.
sector and all of that. But I mean, while the point can be valid, right?
Right.
It's filled with a ton of assumptions.
Right. Yeah.
So, and I mean, I don't fully buy these speculations.
Right. Right. I
I
mean, of
think
course. I mean, I'm talking also about the economic events. Of course, election is to some extent, but it's just one of the things. But prior to that, the Fed corrections and the escalations, uh, there was kind of some trickle down effect to the emerging markets because of that.
well, that did not affect the developed markets, and that did not affect that did not even affect crude. So
Right.
again, I do not buy that it should affect any particular emerging market, right? I mean, in my book, it's just unsustainable valuation and
Right.
which itself was a result of
Right.
unsustainable corporate earnings growth expectation.
Right. Right. So, are you saying that without these events, it would have anyway happened?
Right, sometime or the other, a
Right.
month or a
Yeah.
month or two
Yeah.
here or
Maybe
there.
it could have been 1 or 2 months later, probably. But this
Right,
events, yeah,
absolutely.
yeah. But it was bound to happen. You're right, because we were overvalued over quite some time now.
I mean, let's put it this way, right? So the dot-com crash happened at some point, right? Could it have been plus or minus a few months earlier or later? Could have been, right? But that doesn't change the reasoning. that the valuations were crazy, and the bubble had to burst some point or the other.
Right, 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 right. So there were also, very strong domestic economic indicators as well. Like, our industrial production was low, subdued
Right.
consumer demand, reduced government
Well,
spending due to elections and all that. It's kind of, there is a lot of domestic economic indicators as well, which trigger these things, not just the uh, FI, right? So I
I
think
mean,
it's all time together. Yeah,
it looks like the domestic investors don't care a lot about these indicators, while the foreign investors pay close attention. That's what it looks like.
yeah, that's true. But at least the fundamentals will get affected, right? In the prices, and you can't be overvalued for a longer time if your fundamentals are screwed, right? So that's the thing.
Well, that's true. Yeah.
Yeah.
But again, if I mean through this SIP systematic investment plan, where people put money into mutual funds
Mm,
on a monthly basis and stuff. I mean, that's kind of automatic. That's blind, right? And so domestic institutional investors have to put that money to work.
mm.
You know, I mean, even if it means putting good money after bad. So,
Right, right,
yeah.
right. Okay.
So that's
So,
that's one phenomenon that sustains these valuations
mm,
for longer than they should be.
mm. Okay. What do you think would be the investor response now?
Well, I mean, it depends. I think the investors have to diversify.
Mm,
You know, I
yeah.
mean, what do you diversify into? That's a good question.
Mm,
You could diversify geographically.
mm,
You could diversify across asset classes,
mm.
right? That's a useful thing. And more
Right.
importantly, you can just diversify into cash
Mm,
because I mean, forget everything, all the intelligent global investor talk,
mm.
right? You can just switch between cash and equity.
Right.
So I
Right.
mean, that's intelligent enough,
Mm,
right? So I mean, just keep an eye on valuations,
mm,
right?
mm,
And we will put that up. We'll put the study up in our
mm,
description,
mm,
right? So valuation of 24, 25, it's time to sell,
mm.
right? Valuation of 15, 16, 18, time to buy, right? So if you just work that, you'll do okay.
Right. So, any trading opportunities you would, look at?
Well, I mean, this is not exactly something that is of a special interest to traders
Mm,
because these are all medium-term phenomena,
right.
right? I'm not sure.
Mm, right. Okay. So, any caution to traders?
Well, I mean, nothing, you know. Uh,
Okay.
I mean, if see, trading is a business of generating alpha,
That's
right?
true. Yeah.
Because
And
because 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 your trades, the market's not going to make money for a trader. The market's going to make money for investors. That too in the long run,
mm,
right? In the short run, the time frame of the traders, the market's going to make is not going to make you your money. So
right.
your skill, your alpha generating ability has to do that,
Mm,
right?
right.
If you've got that, this uh, correction is not going to stop you.
Right.
I don't think it's going to throw extra opportunities either
Mm,
because it's not like a deep correction.
yeah. That's true. Right.
Yeah.
So
So
would you consider value investing? Some of these fundamentally strong, stocks which are, undervalued right now. Would you?
that can be done anytime. That can be done anytime. But at an index level, I don't think it's undervalued. I mean,
Right,
if anything, things are still slightly overvalued relative to its own history, right?
right.
I would
That's
I
true.
would I would probably look at digital as a theme,
Hmm,
right? I mean, I don't think they're undervalued enough, but I'm gonna buy them when they're undervalued
hmm,
relative to their own history, relative to their own earnings, whatever it
hmm,
be.
hmm. Right. So any particular sector that you would look at, you know?
Digital is, I think, that's going to be, I mean, if anything, that's going to be the sunshine sector for
Hmm,
the next 5, 10 years,
right.
right? I don't know. I mean, I don't study micros too much,
Hmm,
but this is what occurs to me, right?
hmm,
From my limited study of the Indian market.
right. Okay. I think um, we have pretty much covered, what it is today and why it has happened. I mean, to the extent of how our own knowledge, and also presented how the investors and traders should look at things. Um, Anything else? I think, or you want to talk about?
That's about it, I guess. Happy investing, happy trading.
Yeah. Have a great day. Please subscribe, like, comment. Uh,
Especially comment. We'll try and
yeah,
answer
yeah,
your questions, your views. We will.
yeah,
We definitely love an engagement
yeah,
via comments.
and share as much as possible. Yeah,
If you think there's value for your friends and
absolutely. There's no
acquaintances
force
and
there.
family,
Yes. Right.
right?
Okay. Happy investing. Bye.